All right, here we go, folks. I got some carpeting in here, so let me know if it sounds better. I don't know. I don't know. All right, it is Tuesday, February 13th. Big down day today. Big down day because, the monetarists got scared today. We had a reading in the CPI of 0.3%, and they were expecting 0.2%. Ooh, that 0.1% really made a difference today. So they sold the market down 700 points. We closed down the Dow 540, I think, and all the market averages were down. Now, normally I would say that you got to go against the monetarist zombies. Like I always say that when you get these kind of reactions, because, they're highly emotional. They are completely married to this concept of monetarism, even though we have seen over the years how this is completely misunderstood, and actually they have it kind of backward. They got all last year wrong with the rise in interest rates and how that was positive for the economy, how the stock market rallied. I mean, all these big shots and these very serious people on Wall Street, they all got it wrong. I even mentioned to you last week, I think it was, when that guy, Mike Wilson at Morgan Stanley, who was like the super bear of Wall Street, he kept saying there's going to be a major crash and the Fed's going to keep raising interest rates, which they did, and it's going to be terrible for the economy. It's going to be horrible. And this guy got completely blown out. I happen to know people who were working at firms, asset managers, whatever, who took this Morgan Stanley's advice on the recommendation or the guidance of this guy, Mike Williams, and they lost a lot of money for their clients. Anyway, so normally I say when you see these kind of reactions by these zombies, these monetarist zombies, you have to go against it because it's emotional and it is ingrained with a complete lack of understanding of monetary policy. However, today, I'm saying that the monetarist zombies maybe got lucky for once. And the reason I'm saying that is because, as I have been informing you, that leading fiscal flows will peak for the cycle and actually for the year. And I'm going to clarify that. Will peak on February 15th, on Thursday. Tomorrow we have a Social Security payment. Thursday, we have the quarterly interest payment, which will be like $55 billion. And so we get a big spike in leading spending flows over the next 2 days. And so that's normal that this happens also in February and into early March, which is really the peaking cycle. It's maybe not exactly on February 15th, but it goes like from mid-February into early March. That's also usually the peak in IRS tax refunds. So you get a lot. I mean, you're talking about, if you want to use a swimming pool analogy here, the water flowing out of that pipe into the pool, the amount of water, the velocity of the water coming out, it's very, very rapid in this time period. And then it drops back down, and what I said earlier was it peaks for the year. It doesn't mean it shrinks down to nothing. It just means it comes off of this spike level and it goes back into a normal month-to-month flow, which is still very significant because we're going to be doing over 7 trillion annual leading spending flow for the year. I keep coming back to this number, 7 trillion plus, because this is an enormous number. And so you can't ignore this. I mean, this is an enormous number. And we still have a deficit, which means there's it continues to be a net addition to the financial assets of the economy. It's just a little bit less than what we were getting last year at this time. Not a significant, reduction, just a small reduction. So I'm not really worried about that. So, and getting back to why I said I think the zombies got lucky this time. They got lucky this time because I think they're selling at the most opportune moment, because actually we're getting into the environment or the period now, like I just said, where the fiscal outlook, slows down a little bit. So it's kind of like they're going to have the wind to their backs on this one. Whereas in the past, I've always said go against these reactions by the monetarist zombies because they don't know what they're doing. They're completely emotional. They have monetary policy understanding completely wrong and backwards. So you definitely want to go against that. But every once in a while, they can get lucky. And I think this may be one of those times. So you've got the fiscal environment, which is kind of like in their favor right now. And that's why I think the market correction is going to continue. Okay? So I want to mention that. The dollar was very strong. I remain a dollar bull. I've been saying that for a long time. When the dollar index got down around 100, and it maybe even dipped slightly below there, I kept saying, look, you got to buy the dollar. You got to buy the dollar. You got to buy the dollar. And the dollar is in, I believe, like an important bull trend, which is going to persist for a pretty long time. I mean, with the U.S. as a net exporter of oil and petroleum products, that is a bullish fundamental factor for the dollar. And I do not see that stopping anytime soon. I mean, we have record oil production now at 13.3 million barrels a day. And, that's just, a lot of that is being exported. I mean, if you still want to know, gasoline prices have come way down. But they could have been lower if we were not exporting so much of our product. By the way, on that note, it's very interesting because why is inflation still kind of above the Fed's target? It's because of the Fed. I've been over this so many times. Because of the adherence to this monetary policy orthodoxy by most central banks, with the exception of the Bank of Japan, these central banks, the Fed, the Bank of Canada, the Bank of England, the Australian National Bank, the New Zealand, you name it, all of them, they all believe that raising, the Turkish National Bank, the Argentinian National Bank, they all believe that raising interest rates is the way to squash inflation, despite the evidence to the contrary. I mean, the most glaring example are the last two that I mentioned, the Bank of the Turkish Central Bank and the Bank of Argentina, which inflation is through the roof, interest rates approaching or above 100%. They keep raising the interest rate. It keeps destroying the currency. It keeps inflating inflation, and they refuse to understand. They refuse to connect the dots. They don't connect the dots. They can't see the correlation there. And then, as another perfect example, just in the opposite sense, you have the Bank of Japan, which has never changed its negative interest rate policy. Japan being a major importer of energy, and we went all through like the COVID and the oil spike and everything like that. Inflation stayed very tame, and now it's really, really low, and they kept their negative interest rate policy. So the Fed, as I've been saying, is impeding what would have been a much more significant decline in inflation simply because it's keeping interest rates high. And I've said so many times that the cost of credit is reflected in the cost of all goods and services. If you raise interest rates, you raise the general price level. I mean, Look at housing. If you want to, home affordability right now is very, is very low because interest rates are very high. The cost of credit is reflected in the cost of all goods and services. And when they keep interest rates high, they're basically keeping the general price level high because everything hinges off of the cost of credit. And they just refuse to understand this. And they're sitting there scratching their heads, wondering why inflation is not coming down faster or further than they anticipated. It's because of their own policy, which they're going to stick with it. They're going to stick with it. And now we may be getting into a situation where we could have some significant upside in petroleum prices, in oil prices, in fuel prices. We're starting to see some sizable drawdowns in refined product. Just tonight, as a matter of fact, the API inventories showed big inventory declines in gasoline and distillates. And we have a situation where there is very little surplus year compared to last year. I mean, we're basically at a threshold, at least with gasoline, we're at a threshold where we are almost even with last year. And if we start to see some drawdowns in gasoline stocks, we could see higher prices there. We could see higher prices in distillates. And that's just going to freak the monetarist zombies out because they're going to be focused on that. And it'll also keep the Fed from cutting interest rates because they're going to be looking at that as well. So the last thing I want to talk about, maybe some of you know this guy, Larry Kudlow. Larry Kudlow he's one of the hosts on CNBC. He has a show, I think it's called Kudlow and Company. I actually appeared on that show several years ago. It was ridiculous. Kudlow, from what I understand, his education, he is not an economist, although he has kind of posed as an economist his whole entire career. He was chief economist at Bear Stearns, a firm that went out of business. It went bankrupt. I'm not saying it was his fault. But Kudlow is one of these hard money characters, and he really doesn't understand how the monetary system functions. And I saw an article today that mentioned him where he said that the United States is on the path to bankruptcy. Okay? Now, this is the kind of thing you would hear from like a Peter Schiff or something like that. Let me just say this. It is impossible for a nation that is a currency issuing nation as the United States is, where all of its liabilities are denominated in its own currency. In other words, the United States has no liabilities or debt in a foreign currency. We're not on a gold standard where we would be forced to deliver gold if some counterparty that we trade with says, we used to be up until 1971, but we're not on that anymore. So the discussion or the claim that the United States can go bankrupt is completely ludicrous. It's completely false, and it can never happen. If you want to talk about the issuance of currency being inflationary, that is a conversation we can have. That's not the same thing as saying we're going bankrupt. And I would argue against that conversation or against that assertion if you are a capitalist and if you are in a free market economy, as we pretty much have here, then I just cannot understand how anyone would be able to argue that government spending creates inflation. Because if you are a capitalist, you believe in the profit motive, And if government spending induces the private sector to create the goods and services demanded by the government as a consequence of that spending, or as a consequence of the transfer of that money to the citizens, if you believe in the profit motive, which is what capitalism is based on, then you understand that the private sector will respond to that by creating more goods and services. So even though spending is higher, supply of goods and services goes up. So you do not have what you would say necessarily automatically you're going to have. No, you don't have inflation from that. You have a private sector that responds to the stimulus of more spending by creating more goods and services. Okay? Now, if there was something broken in the system, like what we had in the pandemic, when the supply chain was basically shut down, when businesses were closed, when people were sitting at home and unable to go outside, unable to go to work, then yes, you have a system there, or you have a situation there where you can have inflation from higher spending, because you have kept the economy from responding to that demand. But that was not something created as a result of spending. That was created as a result of the pandemic. You can't then say it's because of the spending. No, it was because of the pandemic. That and we saw, as soon as conditions started to come back down to normal, we had a big boom in the economy, and inflation has started to come down. And as I said earlier, the only reason it hasn't come down more is because the stupid Fed is keeping interest rates very high, and that's keeping the general price level high. Otherwise, it would have come down exactly to the target they're looking for, or probably below the target they're looking for. But they're idiots. They keep doing the same thing. They adhere to an orthodoxy that's completely wrong, that's completely false, that you could look around the world at where it is applied and actually see the opposite result of what they're trying to achieve, and yet they will sit there and double down and triple down on the same ideas. So again, you cannot, if you claim to be a capitalist, if you claim to believe in the profit motive, which I think most of you probably would agree with that, then I would say it's impossible for you, or it is hypocritical for you, to argue that more spending necessarily equals higher inflation. It doesn't. Government spending induces the private sector to create the goods and services which that spending demands. It's very simple, very simple. You know, these are variables in an equation. The output is a variable. It's not a fixed quantity. If it were a fixed quantity, okay, let's say we maxed out our that's another thing we could say. Let's say we maxed out our productive capacity. And then the government kept spending and spending. All our factories were maxed out, not just here, but the whole world, in China, in Vietnam, and all the places we buy from. In Brazil, commodities, whatever. All the places we buy from. If all of that was maxed out and everybody was working, there wasn't a single person left that we could employ as a laborer. Okay? Then you could say, yeah, more spending is going to lead to inflation because you just simply don't have the productive capacity to meet that demand. But outside of those conditions, which don't exist, okay, if you're going to argue that the spending automatically equates to inflation, then you're going to have to convince me that, A, either we've maxed out all of our productive capacity all over the world and our labor, or B, there's something broken in the system, like a global pandemic which shut down the ability to supply the goods, to make the goods. Same thing, productive capacity, whether it's maxed out or whether it's just sitting there idle because of a crazy, pandemic, you're going to have to argue that, because that's the only way that you could rationalize higher spending automatically equates to inflation. It doesn't. And if you argue that, and you claim you are a capitalist who believes in the profit motive, you're contradicting yourself. You're not a capitalist, and you don't believe in the profit motive. Okay? So I just want to make that clear. Anyway, I don't know if this carpet did anything for the sound quality. I could have sat outside today. It was a beautiful day. But I wanted to check this out. Anyway, that's it for this one, folks. Don't forget, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader. See you tomorrow. Bye.